Okay, so this is a tutorial on Fibonacci and how to use Fibonacci in depth for people who are new to Forex or intermediate people who've been trading for a while who just need to brush up on it. So, what is Fibonacci? Fibonacci is just a tool to measure ratios in financial markets to determine future price predictions and projections based on current patterns of market structure. Um, that is what Fibonacci is, and that's what it's used for. This is what it looks like right here. If you use TradingView, it's usually right here to use for click. And it's just a mathematical theory based on the ratios of a structure to determine what might happen next based on the current pattern. And all financial markets are patterns that tend to repeat themselves in varied ways, but the overall structures are resemblant of past structures, and that's what you get. And that's why Fibonacci's work. I use it all the time, every day, every time I analyze. It's probably one of the most useful tools and most commonly used tools by everybody that trades Forex. And especially for me, I use it all the time. It's really important. It's very useful. Okay, so let's go over the settings that I use. So go to template, or sorry, go to click on settings, go to style. I'm gonna leave this on the screen so you can copy all the settings and all the numbers. But I have all of these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I have 16 different levels that I use, and I can break that down into 3 separate parts. So everything from 0 to 1 is used for retracements. Everything below 1, or technically, if you're looking at the numbers, everything above 1, 1.1, 1.15, 1.2, that I use all of these for stop losses, for determining stop losses. And then everything above the 0 level, or technically, like if you're looking at numbers, the negative level is used for take profit. So everything above here to here is used for take profits. And I'm gonna go through each of those sections separately. So let's start with stop losses. Stop loss levels that I use are 1.1, 1.15, and 1.2. 1.1, 1.15, and 1.2. The reason I made 1.15 yellow is because it's the median level. So based on how confident I am about a move, I will put the stop loss closer to closer to 1, and if I'm feeling less confident about it, I'll put the stop loss at 1.2, and then if I'm just kind of confident about it, I put my level at 1.15. But generally speaking, if I am wrong about a move, it will usually go past 1.1, all the way down to 1.2. So this entire area in general is a good area to use for stop losses, and you can quantify that with the Fibonacci tool. All right, so for retracements, which is the second section, all of these lines are used to figure out where price might pull back to go higher, or I guess if you're in a downtrend, where price will reverse to the upside before it goes lower. Um, but the main levels that I really focus on are 0.382, 0.618, and I also put these mid average levels as yellow because sometimes it likes to come down to that area. Now you gotta understand, the one thing you have to understand is markets are not perfect and they are never exact. But your job trading is to make things exact as possible, so that way it's easiest to follow and it's less ambiguous as possible. It's so important to make sure that things are as little uh, as less ambiguous as possible, because the more ambiguous it is, the harder it is to make decisions. And trading is a game about making decisions. So the more you quantify how to make decisions, the easier it is to trade and make decisions when you need to make the decision, when you need to take a profit, when you need to cut a loss, whatever, right? So as far as retracements, the main levels are really 0.382, 0.618, but everything kind of revolves around these two levels. But you got to understand, like I said earlier, nothing's perfect. So you want to just use these as general gauges to determine where price is going. Um, so like right here is basically at 0.382 level, but it's not exact. It went slightly past it. But generally speaking, it is a 0.382 level, and I would look at it as a 0.382 level. If if it went down here, it'd be a 0.618 level. But it went to like right here. And it wouldn't be perfect, but if I was analyzing it, I would say it's a 0.618 retrace. So you got to understand how to use these levels to look at the retracements. And I'm going to go into more depth about that later. All right, so the next section is the take profit levels. Okay, so the take profit levels that I have are negative 0.27, negative 0.444, negative 0.5745, and negative 0.618. Now, negative 0.27 and negative 0.618 are the standard levels that are the default levels that are on the Fibonacci, on every Fibonacci tool, no matter what program or software you use. It's also on the default for TradingView. Now, these custom levels, negative 0.444, negative 0.5745, are levels that I came up with based on my experience that price usually tends to hit. And the reason I use them is because I want to maximize my profits and maximize how big the move is, and so I know when to get out. So as far as the take profit levels, if you are right about an uptrend or a downtrend structure, generally speaking, negative 0.27 is probably going to get hit like 95% of the time, almost always. I mean, in this case, it didn't get hit right away, but look what happened. It still went up after it came down, and then it hit it. And this was a pretty strong move because this was so this was a pretty strong move, and it just went higher, and it even went past negative 0.618. Generally speaking, that doesn't happen that often. That almost never happens. So I usually only use negative 0.27 or negative 0.444 to write out, analyze where my take profit should be. And unless I'm super confident about a move and that it's going to be a really strong move, I don't use these two levels. Um, yeah, so I don't use these two levels unless I'm really confident that it's a really strong move higher or a really strong move lower. Do Let's analyze a random structure. somewhere. Okay, let's go over here for a sell-off example. All right, so let's determine the trend. Is it a downtrend or uptrend? It is a downtrend because it's selling off, retraces, sells off even longer. Okay, so let's isolate the structure right here, right? This is the move we're analyzing. Okay, so how do we draw the fib? This is the downtrend top wick of the structure to the bottom wick. Boom. What do we get? Retracement to the 0.618 level, 0.559 level, right around this general zone. And then it goes down, takes out negative 0.27, takes out negative 0.444, and misses the last two take profit levels. That's why I don't usually use these last two levels, because a lot of times they don't get hit. But these two levels almost always get hit. And that's what I tend to use. I actually use negative 0.444 all the time, almost every time I analyze. But unless I'm kind of skeptical about the move or I'm just not confident in it, I'll use a negative 0.27. But almost all the time, I use a negative 0.444 level. Because it almost hits it. I would probably say 80-90% of the time. Negative 0.27, honestly, it gets hit like 90-95% of the time. But because I trade intraday and I'm willing to check the trade every few hours, I'm okay with checking it, putting my take profit here, and if I'm wrong, I'll just get out earlier. But usually, it almost always gets hit 80-90% of the time. And as long as I'm right about the overall move and structure, it'll get hit. So that's a downtrend analysis using a Fibonacci. All right, let's use an uptrend. Okay, boom. You got an uptrend move right here, retrace, another uptrend. Draw the Fibonacci, bottom wick to top wick. All right, what do we get? Generally speaking, this was a pretty big move. So it actually went all the way up here, which doesn't happen often, right? But it went up here. Went up, retraced to the 0.559 level, went higher, took out these take profits. Almost, oh, wow, it even took this one out, but took all these take profits out. And that is an uptrend Fibonacci. All right, so back to Fibonacci retracement levels. Another trick and tip that I've picked up over like years of analysis is, in a general rule of thumb, the lower it retraces, the lower it will go higher and extend. The lower it retraces, the lower it goes higher and extends. So let's say this move went all the way down to like 0.786, right? If it hit a 0.786 level, chances are it might only hit the negative 0.27 level, because the lower it retraces, that tells me that it's not as strong and sturdy of a move continuing higher, and the momentum is not as strong. But let's say it only goes down to 0.382. That tells me the strength and the pressure and the sturdiness of the structure is stronger, so it's probably going to go higher. It might even hit the negative 0.618 level. That's what you have to factor in when looking at retracements. As far as Fibonacci analysis, so the deeper the pullback, the weaker the continuation, and that goes for uptrends and downtrends. The less deep the pullback and the shallower the pullback, the stronger the continuation. So let's say it only hit the 0.236 level. Chances are, if it hits the 0.236 level, it's going to go all the way to negative 0.618. So that's something that you have to factor in when using Fibonacci. The deeper the move, the less momentum continuing. The shallower the move, the more momentum continuing. So as far as using Fibonacci analysis, that's what it comes down to. I'll probably make other videos on Fibonacci analysis, and make sure you like and subscribe.